Welcome, welcome. So basically, if you are doing accounts, it's very much important for you to understand the first topic which we have, which is the double entry system for assets, capital, and liability. And to begin with, we have the question which states, complete the following table. So this table which we have the first column which is saying account to be debited, and the second column which is saying account to be credited. So I've got quite a number of options there, A, B, C, D, E, F, G. So now, what we do in this case, we have to understand each of the statements. So just before we begin, you have to note that every time you are making a transaction, or every transaction has got two things which happen. It's either the account is being debited or credited in that case. So now in this case, when you look at this question which we have, like the first part, which is a part, it's saying bought office machinery on credit from D Isaacs Limited. So what happens in this case is that bought office machinery is actually an asset. So whenever assets are increasing, they go to the debit side. So now, this person or this company, D Isaacs Limited, D Isaacs Limited is going to be credited because D Isaacs account is giving out. So what we're going to do is D Isaacs Limited's account is going to be credited in this case. So office machinery account is going to be debited, D Isaacs Limited's account on the credit side. The proprietor paid on a creditor C. Jones from his private funds. So what is going to happen is that C. Jones received that amount of money. So meaning C. Jones account is going to be debited. Okay. So we're going to record C. Jones on the credit side of this table. And this proprietor is actually the owner of the business. Okay. So now the proprietor is going to be on the credit side, meaning the proprietor account is going to be on the credit side. Then a debtor, which is the C part, is a debtor N Fox paid us in cash. So what happens is that our cash account is receiving such amount of money, like I don't know, maybe 2,000 or 4,000, meaning cash account is going to be debited. The account to be debited is going to be cash account. Then this debtor, meaning this person who is owing us money, these are receivables, of course. N Fox account is going to be credited, okay, because N Fox has given out. Then the D is saying repaid part of loan from P Exeter by check. When you pay something by check, this means that your bank account is reduced by a certain amount of money. So bank account is going to be credited. Then this person who received, who is P Exeter, is going to be debited, meaning the account to be debited is actually the P Exeter account. Then account to be credited, bank account. Then the E is saying retained some office machinery to D Isaacs Limited. This question, this statement, when you are not very much careful, you may think maybe we have got retains outwards account and also D Isaacs Limited account. No. In this case, we only have one office machinery account and also D Isaacs Limited account. So now what is happening is that the account which is going to be debited is D Isaacs Limited. It's going to be debited because D Isaacs is the one receiving. We are retaining those office machinery to this person. Then the office machinery is going to be credited because at first we bought some office machinery. Then after realizing that maybe these goods were not in good shape, we decided to retain them. So what happens is that we are going to, meaning the goods which we had bought at first from this person, some of them were of not good quality, so we had to retain them, meaning the office machinery account or the office machinery they are actually reducing by a certain amount or number. So the F part, we have a debtor N lien pays us by check. What happens in this case is that the bank account is being debited, meaning the bank account is increasing by a certain amount of money, meaning our bank account is going to increase. Whenever an asset is increasing, it is debited. So bank is going to be debited, or bank account is going to be debited. Then any lien is going to be credited. Any lien account is going to be credited because he's the one who's paying us that amount of money. Then the G, which is the last one, is saying bought van by cash. The cash account is going to be credited because how much we have in hand or whatever is actually reducing by a certain amount, that amount equivalent to the price for the van. So the van account is going to be debited. Then the cash account is going to be credited because it is reducing by a certain amount, of course.